Hey guys, Kill Stokes here. Welcome back to a special Trading Edge video. This weekend I want to take you behind the curtain and share with you a very powerful lesson that we had on the platform this week about, well, essentially how different traders can look at the same chart, but analyze it and interpret it in different ways. This lesson is also going to go hand in hand with helping you develop your trading philosophy. That way you can have confidence in what you see and not get distracted by what others see. Now, I'm going to try to edit it as much as I can, but it is a very long episode. But before we get started, do me a favor, subscribe if you're not subscribed already. I know a lot of you guys watch, but you haven't hit that subscribe button. Please do that now. And also, if you're new to the channel, make sure you check out the Trading Coach podcast. 3 new episodes a week covering every topic you could think about related to your trading. So if you're someone that's working on how to trade or learning how to trade from the very start and you have questions that need to be answered, I guarantee the answers could be found in that podcast. All right, let's hop in. So this is the answer to this question. There's no wrong answers. Will have a lot to do with your trading philosophy. And mainly when I say your trading philosophy is, are you more trend-based or are you more counter-trend-based? And this will also tell you a lot about probably what type of trader you are. That's why I like asking these questions, because it gives you a chance to tell you what type of trader you are. So if you are a trend-based trader, your underlying belief is that the trend will continue until it's violated. Right? Does that sound about right to you guys? If your philosophy, and you may not know this about yourself, again, this is the part we talk about. We go through the course, and the first time you go through the courses, you just want to learn because you don't know what type of trader you are. And then hopefully, as you go through those courses and you spend time like here in a live room and we talk to you and whatnot, you kind of figure out what type of trader you are. And then when you go through the course a second time, now it's easier to pick what type of strategy you want to follow because you know that I am more trend-based, I am more counter-trend-based. Toby says, I don't like labels. Yeah, but we have them, because I'll tell you this. If you, so a lot of you guys said that you believe prices likely to go back up to 90 even, right? When I look at this, I say there's no way I would believe that price is likely to go back up to 90 even, and it's all because of a difference of philosophy. If you have a trend trading type of philosophy, your pure belief is that this trend is likely to continue, right? No matter what happens up here, this trend, and we'll draw this on because we hit a previous level structure. This trend is likely to continue until this outside return is violated, right? You've just shown me that that is your belief. For someone that is more counter trend by nature, right? And this is me, so I can speak to this. I'm looking at it like this. Price came to structure. Price double topped at structure, failed to break twice, and then moved back. If this were a strong trend, we would have broken through and not gotten rejected. So a counter trend nature type of person is saying, I need proof that this trend is going to continue. There's no way that I would anticipate price going from here all the way back up here again because it already failed twice. And it's important to kind of understand and think about what type of trader you are, because again, that's going to kind of mold what type of strategies and philosophies you have. And there's no wrong answer, guys. It's all about how you view the market. But those are the 2 ways that you can look at this. You can say, hey, price is coming back down to a previous level of structure. I think we can all agree this is a decent level of structure. We all have already. Now the question is, what do we anticipate price doing at this structure? This is the prediction part of our IPDE. If you have a trend bias, you're saying, hey, we're likely to retest again because this trend is not violated. Until this trend is violated, my belief is that this trend is going to continue. Counter trend traders are saying, hey, we already extended to the point that we would expect to extend as a trend. We're not no man's land. We came to structure. We had our battle. And the trend lost. Not once, but twice in this battle. Why would I expect it to go all the way back up here if it already lost twice at this level? Those are the two ways of looking at it. And again, going back to our conversation earlier, when we're doing a lesson about reading a price chart, there's a difference between reading a chart and asking for trading opportunity. So let's say you're someone or let's say you're in both boats here, or you're one person's in one boat, one person's in the other boat, right? A trend continuation trader like Gregory may say, hey, I think we're going to bounce all the way up to the even handled number, basically the top of this zone. Someone who's more counter trend trading, they may say, hey, you know what? I like the fact that we came in the structure down here, but I'm only interested in trading to a move up to the very beginning parts of this zone. Because again, in counter trend, you're a lot more conservative in nature. You don't believe that price is likely to push further up because your belief is that the trend is over, or it held still, whatever like that. So you're not looking for a big move up, but you're saying, hey, we can probably get a push up to this inside level of structure before the market kind of decides what it wants to do next. So it's still a trading opportunity for both parties at this level, or was. This wouldn't be a good one because there's no reason for entry, maybe on hourly, but you guys get what I'm saying. This can still be a good trading opportunity, whether you view it from a trend trading philosophy or a counter trend trading philosophy. The biggest difference is your expectations, where maybe that counter trend trader is saying, hey, I only expect to go to here, where that trend continuation trader is saying, hey, I expect us to travel a lot further. And that's typically the nature of trend versus counter trend in general. So love this example because it shows both sides of the markets. It shows two different opinions on the markets. Everyone likes to ask, well, which opinion is right? And the answer is both, right? This is trading. The markets have different opinions. If the market didn't have different opinions, guess what? The market would never move. It would just go sideways because everyone would be like, oh yeah, that's the right price. Cool. And it would just stay at the same price forever. But this breaks down how the markets move, because buyers and sellers, traders in general, just have different opinions on their interpretation of price. And if your opinion is different than someone else, it doesn't mean you're wrong. Spoke about building confidence yesterday, right? Doesn't mean you're wrong. Just means you see the market from a different perspective. Greg says, Coach, if you look at the structure below it, we had the same thing. Price struggled, went down, then up again. Yeah, that's how trends work. Yep. that's how trends work. It's structure is bad. Like, I'm not trying to say my point is better than yours, because again, there is none. But trends work like this. Price goes up, price goes down. At some point, price is going to come to structure. Am I right, guys? At some point in the trend, we have to come to this level. And there's going to be a battle at this level. And guess what? Someone's going to win, someone's going to lose. Am I right in that? Is there anything wrong with that statement? Can we all, whether you're trend based or counter trend based, can we all agree with this? This is how market moves. At some point, we're going to hit a level of structure. Give me a yes if that's correct. And the question that we're asking as traders is, what's going to happen at this level of structure? And either two things will ultimately happen. We will break through, or we will hold and reverse. The difference in your underlying philosophy, and this is what Greg is saying when he's looking at, oh, well, the previous level did this, is your underlying belief is that trends are strong and we're more likely to break through than hold. My underlying belief as a counter trend trader is that structure is strong and it's more likely to hold than break through. And sometimes I will be right. Sometimes you will be right. That's what stops us from being 100% traders, guys. And ultimately our job as traders, especially if you're someone that does both, and I do look for both, is we have these decision points, we have these levels, then we look for clues. We look for clues for the market to tell us that it's leaning more one way than the other, right? That one thing is more likely to happen than the other thing. So I agree with you 100%. In the past, price action came to structure, reversed a little bit, and broke right through. That is going to happen in every single trend, right? Look at this downward move. What did we do? Came to structure, broke through. Came to structure, broke through. Came to structure, broke through. Right? That's how a trend works. And you'll see the exact opposite for counter trend, where we came to structure, got rejected. Came to structure, got rejected. Right? So we can find many examples of both. We don't want to kind of have any type of confirmation bias, and that's another thing that happens as a trader is because we think one way, We want to prove that our way is the right way of thinking, and we only look for examples that prove our way to be right. And it's very easy to find. It's the same thing as, like, you see this a lot. There's a big mistake in back testing where you're back testing, and let's be honest, does anyone want to back test to have a result that's negative? No. So what we'll do is subconsciously we'll back test, but we'll kind of filter out the losing patterns and only take the bigger one, the good ones, the winning ones. Because we know that if we only take the winning ones, we'll get the numbers that we want. If we get the numbers that we want, we'll prove our edge. We prove our edge, we can start trading live. We start trading live, we can make money. But it's a little bit of a self-sabotage where we're not really getting an honest result. And that's just, it's a natural thing that we'll do. Especially, look, if you've ever been on backtest and you hit that losing streak, you start seeing the next loser and you're like, well, I probably wouldn't have taken this one because it was on a Wednesday, and I knew that I would have to get the kids ready for school today, and I knew that they wouldn't be happy with their cereal, and then we'd have the whole book bag thing. So, like, yeah, I wouldn't have been around, so I wouldn't have taken this one. But if it would have won, you know what? Yeah, I would have went back to my computer in the middle of the tantrum and then placed my trade and then handled the tantrum. Like, it's very easy for our minds to do. So let me read through some of these other questions. Toby said, really appreciate your breakdowns. Another clue I see, Coach, price was making a bullish flag before it dipped below. So that tells me there's likely something in the works for a higher move. The dip is likely for liquidity. Again, that's another interpretation, right? You may want to see this as a flag, and we can. I'm assuming you're talking about this right here, Toby. I'm a little bit late, or Gregory. I'm a little bit late in reading this. Yeah. You may see this as a flag. Someone else may see it as a double top. Which is it? If you have a trend continuation bias and you want to look for reasons for it to break out, you're going to see it as a flag. Why? Because a flag is a breakout pattern. Now, again, this would be a violation of a flag. So that it wouldn't really help your case, right? Because the flag violated. But if we went straight sideways, it'd be a high and tight flag, which is a very strong sign of a continuation pattern. Ideally, you want to see it after the break of structure, not at structure, but a high and tight flag would give confirmation that says, hey, high and tight flag, that's a good bullish breakout pattern. More reason for me to expect the trend to continue. That would be a positive sign. That would be a clue that you can use for that trend continuation. On the other hand, you look at this as a double top. George is saying double top. That's two rejections. Break and close below the V of the double top. That's confirmation that the double top held. These are all signs that say, no, not a continuation. So the flag case doesn't really that wouldn't make much sense at the time. Well, at the time it would. I don't personally see it as a flag, but like at the time it wouldn't. Or at the time maybe it would, I should say. The fact that it's violated would, because that's a violation of the flag. So the flag is done with. You. In my opinion, you can't use that as information for a move to go higher. You can't look at a broken flag and say it's still a bullish sign. That's just, I think that's just, and again, everyone has different opinion. I would see that as making up something for confirmation bias. Like I know you want to battle on who's right and who's wrong, but I'm going to tell you, like, no one's right, no one's wrong. It's just difference of opinion. We just want to make sure our opinions are, they're going to be slightly biased due to our philosophy, trend versus counter trend. But we want to be, we don't want to be, we want to be honest about what we see in the market at the same time. So yes, we can have our biases based on if we're naturally counter trend brain or trend continuation brain. Yes. But based on what we see in the market, we still want to be honest with that. We don't want to create stuff just to fit our case. That's where we can get into trouble. That's where we can get into trouble doing that. But I would see this as a double top much more than a flag. We don't, we have a clear spike, a clear reversal and a move back up here before the violation down. So it wouldn't be a flag. Just how I view it, wouldn't be a flag pattern for me. But if it were, again, the violation of this flag would negate it. That would take all the power out of the flag. If we continued sideways, then yes. Because that would mean that, hey, the sellers have tried to push down, and guess what? They've refused. They've gotten rejected each time, right? More high and tight flags, very strong, powerful, bullish patterns. Probably one of the most powerful bullish patterns in my opinion. Not just my opinion. But the fact that it was violated negates that. So it would can no longer be used in court. If anything, it'd be used by the opposing lawyer in court. So, all right, let me catch up on these. These are some good questions and comments. I love it, guys. This is great conversation. Great conversation. I apologize if you're brand new and you have no idea what any of this stuff is. You're like, flag. I just learned what a bullish candle was. What is this flag stuff? Why is it high? What's so tight about it? All right, let me get back. I'm working my way down. I'm real behind on the thing. Joshua says, should your opinion change if you scale down the time frame? That's a very good question. And it will change, but should it change? No. Right? Because remember our IPDE process, identify, predict, decide, execute, right? If we're using multiple time frames, we want to do the I and the P on our higher time frame. This is where we want to form our bias, right? We want to form our bias. What is the market doing? What do we think the market's likely to do on that higher time frame? Because the higher time frame is the perspective. That is the sitting on a mountaintop, looking down at the land below and forming our thoughts and our ideas. It's harder when you go to the lower time frames, because in the lower time frames, you're looking at decide and execute, which is more like the actively trading thing. So what happens is, because we want to actively trade, we start creating things that will allow us to actively trade. One of the cool things about, right, Peter Brandt said this. He said his favorite day to look at the market is Saturday. And it's Saturday because Saturday is the only day where there's no movement. And because there's no movement, it's the one day where there's no temptation to trade. And we know that when there's temptation to trade, what do? We our mind gets all weird, right? We start creating stuff and being silly, right? There's no temptation to trade on Saturdays. So he can do honest analysis without that temptation, that desire, that thought that, oh, I may be missing a trade or I should take a trade. That is similar to the higher time frame, guys. You know that you cannot execute a trade off your higher time frame, right? So if I'm looking at the daily here, I know that no matter what, I can't place a trade off the daily. So I look at it from a perspective of kind of like having freedom. I know I can't place a trade off it, so I'm just here to look. It's like back in the day when I was broke, and I would go to the mall and I would look at fancy stuff, and like I know I couldn't afford it, and I would have no problem going in the store because like my friends would be like, aren't you gonna be tempted to buy it? I'd be like, I don't have enough money to buy it. Like, why? No, there's no temptation. I'm broke. Like, this is when I quit my jobs and going to the trading journey. I'm eating ramen and cheese sandwiches and peanut butter and jelly like 3 times a day. Tuna fish sandwiches too. But yeah, there was no temptation to buy anything because I didn't have the money to buy. Like, I just couldn't. It's like if you left your wallet at home, or I guess back in the day before there was like all this iPay or Apple Pay and stuff like that. But you can just look at stuff. The D and the E on your lower time frame, because you know you can trade for these time frames, and because secretly we all want to trade, right? We all want, like, none of us come into the markets not wanting to trade. Well, some of us that are fearful, I guess, but most of us would rather trade more than trade less. When we go down to the lower time frames and we look at this stuff, all of a sudden we're starting to think, okay, how can I trade this? How can I trade this? Because now I'm on my time frame where I can pull the trigger. How can I trade this? How can I trade this? And we start basing our opinion off of what we want to do versus what we actually see. Toby says my wife would argue that my opinion usually sucks. The opinion thing, that's only for trading, not for relationships. Because fellas, you know, the wife is always right. You know, don't you dare say otherwise. Greg says flag pattern better seen on the 4-hour. Yep, but what are we looking on? A daily. You said it yourself. Daily chart. So don't. You're trying to convince me it is better on the 4-hour. But what's our opinion being based off of? The daily, right? Again, we don't want to go down to time frames to see what we want to see, improve our case. We want to follow that process. If the daily is our higher time frame, we're forming that opinion off of the higher time frame. And regardless, even if I know I'm late on the chat, yes, flag pattern. Channel, right? Broken, violated. Once that happens, that negates all the like, would you trade this as a flag pattern now that it was violated? Does the flag have any power? No, the pattern is over. It's done. It's like a double top that got broken and closed below. It was nice at the time, but then it's violated. So now it's pointless, aside from looking for a bounce in the opposite direction. All right, still going through. I'm really late on the chat, but I'm loving this conversation. This is a great conversation. I feel like I'm leaning towards counter trend, but this example has shown me that I noticed counter trend continuation easy. Yeah. And again, you can take that philosophy thing with a grain of salt. Just because you notice trend continuation easier doesn't mean you can't be a counter trend trader. Like, I started as a trend continuation trader. You will grow and change and adapt as a trader, and you can ultimately do both. I do both. Like you can do both. Now I do both with a counter trend bias. That's just my natural bias. So how I approach trend continuation is a little bit different, but you could do both. So I don't want to. I hope I didn't make it seem like you have to do one or the other. I do think as a newer trader, you should start with one. I start with a single strategy, to be honest with you, but start with one thing and then grow from that. You shouldn't, your first live trade you shouldn't be doing 80 million things. But yeah, you can ultimately choose whatever you want, whatever you feel more comfortable with, and whatever you pick up faster. Both can be right. The double top was successful as well, but that doesn't take anything away from the bullish direction overall. Yeah, but again, and here's the point I'm trying to make, and I think we're not. I think Gregory, you're not getting this point because you keep wanting to fight me on this. There's no debate about the bullish direction, and let me know if you guys understand this point, right? There is no debate that we are on a bullish direction. When I talk about the difference in philosophy, it comes back to what I said about our belief with once we get to a stopping point, right? Can we all agree that structure is a stopping point? May not be a permanent stopping point, but at least a roadblock. Can we all agree with that? Could be at some point we hit structure, and sometimes we hold, sometimes we blow right through. So my debate isn't that we're in a bullish trend. It goes back to how we value structure and how we value trend versus counter trend, and the difference in philosophy of how trend traders, their belief is that the trend is likely to extend until it ends. So that this extension is likely to blow through structure until we violate the previous outside return. We may have roadblocks here, we may consolidate, we may retrace, but until the outside return is violated, and technically it would be this, but until the outside return is violated, I'm betting on this thing continuing up. That is ultimately the trend continuation belief. The counter trend trading belief is different. It's saying that, hey, I believe that the trend is strong as long as we get signs that the trend is likely to continue. And when we do stuff like run into structure and get rejected at structure, counter trend traders see that as a sign that the trend has at least stalled. Now, it doesn't mean that we're going to, have I mentioned anything about looking for shorts all the way down here? No, I don't have that belief either. I don't believe that price is going to continue all the way back down. But I also don't believe that price is likely to continue higher until I get proof. And that proof would need to be a violation of the highs. And that's just the difference of opinion. So again, I'm not trying to sway your opinion one way or the other, guys. I don't really care. It's not my trading, right? But I hope what this lesson provides is I hope you can have an understanding of the perspectives of both sides of the market. And I hope we can eliminate this idea that one side has to be right and one side has to be wrong. Both can be right, both can be wrong, right? It's just a difference in how we view things. It's like those pictures that are two things in one, where one person sees the face and the other person sees the vase, right? It's one of those type of things where it's like, I see a face. No, I see a vase. No, I see a face. I see a vase. Like, well, they're both there. Or like, was it the rabbit and the duck? Is that one of them? I see a rabbit. I see a duck. I see a rabbit. I see a duck. It's both there. Just a different viewpoint. So, not trying to make you drink the counter trend Kool-Aid, guys. Trust me, I do not care how you trade. What I care is how we view the markets. I care that we follow rules and we do everything rules based, because that's what keeps us consistent in however we attack the market. But we do want to have a non-biased approach to the market. We do want to understand technicals for what they are. We may use them in a different way, but we do want to, just like the earlier lesson on outside returns, we do want to have some structure in our rules of kind of, what to expect when blah, blah, blah happens. Question, doesn't price always hold for us to have a retracement? What would your indication be that a hold may last or not last? Yeah, so price has to hold and reverse to have a retracement. The location is what matters. So the location matters. So if we ended up breaking this level right here, right, violating this new structure low, and we start retracing right here, right, maybe signs of a retracement right here, I would not be interested in any type of bullish move here. Why? Because we're not at a level where I think price will reverse. Ultimately, it depends on the level. we're not at a level where I think price will reverse. So this would be insignificant to me. If we started showing signs of a retracement here, from a buying perspective, this would be interesting to me because we're at a level where I think price is going to reverse, right? So structure levels are levels where I think price are going to reverse. So we'll go to the bigger picture here. Because price action held at this level of structure, that's why I have no belief that the trend is likely to continue. If price were to rally up and let's say go right here and then start doing this, that would be a completely different story, right? This would be a double top that I would have zero interest in. It would have no power to me because where's the double top at? Is it at structure or is it in the middle of no man's land? It's in the middle of no man's land. So I would not be interested in any shorts right here. If you ask me the question, if price started doing this and you ask me, do you think price is likely to continue up? Then the answer would be yes. So it goes back to the identify, predict, decide, execute, right? And that's why I love drawing these lines on. If price were doing this exact same thing, so imagine my drawing being where price is at, and you ask me, Akil, what are you looking for? Identify, predict, decide, execute. I would draw my line in. I have my key levels of support and resistance already labeled on. I'd say, okay, price is in a bullish trend. We are below the next level of structure. Right? We are below the next level of structure. My belief is that trends and price in general, they go to levels of structure. So I would anticipate price going here. So I would have a bullish bias. And I would say, hey, I'm looking for trend continuation opportunities from here to here. But Akil, would you look for shorting opportunities or the double top? Nope. Double top is irrelevant. But why? It's a double top. It's not at a key level of structure. It's not at a place where I think the trend has been exhausted. Where do I think the trend gets exhausted at? Where do I look for counter trend trading opportunities? At previous levels of structure. This is what I always talk about where I say the what isn't as important as the where. Even with stuff like flag patterns, guys. Like if we have a flag pattern right here, a flag pattern that looks like this, right, is completely irrelevant to me. Why? Because price has come to a previous level of structure and it's held a previous level of structure. So the location tells me I don't think price is likely to go higher because we failed to violate structure. Therefore, the what, which is the flag pattern, is completely irrelevant to me. Now, if we did the same thing, but a little bit higher in that location we identified before, let's say right here, and we started doing this, and you asked me to, it's not the greatest drawing flag, but you guys get it. You asked me to ask me about this flag pattern. I would say beautiful flag pattern. Why? Well, one, we cleared previous structure, which allows me to predict, right? I identify that we cleared previous level of structure. That allows me to predict that price is likely to go higher. A flag pattern is, right, a bullish trading signal. So that complements my prediction, right? Complements my prediction. And there's room to the upside in my prediction of where I think price is likely to go, which is the next level of structure. So all of a sudden, this becomes a grade A trade because everything is aligned. The thing, the what, is aligned with my prediction, which is the where. So you can see there's a big difference between a flag pattern forming here versus a flag pattern forming there. And it all comes down to, for me, because it's the backbone of my structure. Again, you can the backbone of your trading could be anything you want. But the backbone of my trading is structure. And basically, if you had to simplify my trading patterns, it's basically this. I believe that price will go to levels of structure. It will be magnetically pulled there. So trends are likely to continue until next levels of structure. Retracements are likely to happen until previous levels of structure. And then my decisions in the market come based off of what happens at that level of structure. It's as simple as if we break it, I expect us to continue. If we hold, I expect us to not continue. And it's as simple as that. It's a very simple philosophy, and that goes. It carries over to the other things where it's like flags and not necessarily head and shoulders, right? Because they form their own structure, but like double tops, double bottoms, higher high, higher closes, pin bars, tweezer tops, tweezer bottoms, like any other entry reason you can think of in the market is irrelevant if it's not at the right place. It has to be at the right place. And that's what dictates my decisions and my predictions in the market. And it will always do that. I will not fall in love with something that doesn't come at the right location. Gregory says, okay, I get it. After/before structure is the end of the move. I think I get it. Yeah, for me, it's the end of the move until price proves otherwise. So once price, we can look at an example right here where in this case, right, we're trending downwards, and then price ran into structure, and guess what? It held. It was the end of the move, right, for this particular time, and then it reversed and came this way. We can easily look at something else where it's like, look at this. Price action came to structure right around here, held for a single day, and then blew through. It wasn't the end of the move, right? And then it retraced right back to that same previous level of structure, held, and then continued up. So it's the end of the move until proven otherwise. So if you asked me about, if we go into the time machine, and you asked me about my opinion, and this is why the internet used to get so mad at me, because I do the weekend video. And then like, ooh, nice pattern there. Failed one, obviously, but nice pattern there. I do the weekend video, and then I come in next week and have like a different opinion. And they'd be like, well, Keo, last week you were bullish. How can you be bearish this time? Simple as this. If you asked me my opinion on the market right now, if you said, Akil, would you be interested in getting long at this moment as it ran into structure? What do you think my answer would be? What do you think my answer would be? Hell no. Why? Because price action ran into structure and we held. So until the market proves me otherwise, I don't think we're likely to go higher. I can't tell you that my prediction is higher. We're looking at pound dollar here. I can't tell you prediction is going to go higher. I can't necessarily tell you lower. There's not enough here to prove that we're going to go lower, but I can't tell you higher. So I'm just like neutral. I don't know. We'll see tomorrow, right? That's literally my answer. I told you guys about the time I got asked to be on TV, and I declined it because I was afraid I was going to give this type of answer. But if you were to ask me right here, bullish or bearish, right? I would say bearish until we prove otherwise, or not bearish, but like the bullish trend is not likely to continue. And then all of a sudden, we go one day into the future. We come back in a live room. Akil, what do you think about pound dollar? Bullish. But yesterday you said bearish. Well, what changed? Well, we broke and closed above structure. So now I think we're bullish. Right? And that bullish opinion would exist until we come to whatever our next level of structure is, right? And I would say, okay, well, I'm going to continue to be bullish until we hit this next level of structure. And then once we get there, that will be the next decision point. And once again, I'll tell you, I don't know until I get a signal of one way or the other. And then that process just repeats. It repeats. I don't know what actually happens when we get up here. Let's see. Hope you guys enjoyed. Long, I know, but trust me, I tried my best to edit it down from what was over an hour and trying to keep the key components in. But if you like what you saw, hey, join the fun. We have 2 live trading rooms that we run 3 times a week over on the Tier 1 trading platform. We have a London room with Jason Greystone and a New York room ran by myself. You can join it live and join the discussion, get some practical application and learn how to trade the markets. Or if you can't make it live, you can always catch the recordings which are posted after each session. Best of all, both come as part of your 14-day risk-free trial membership on the platform. Risk-free means no sneaky auto bill or anything like that. After your 14 days are up, you just simply lose access and can't log in. So check us out, www.tier1trading.com. Get started today. Join the live rooms, take some training courses, and best of all, work with a great community of traders who are going to hold your hand and hold you accountable throughout your journey of becoming a consistently profitable trader.